Hello, everybody, and welcome along to today's webinar. It is that time of year again where we have to run through payroll year end. If, like me, you think we only did this yesterday for 2021, time certainly has flown by. I'm joined today by Duncan, who will be co-hosting and presenting alongside myself. And we also have a crack team of experts in the background ready to answer any questions that you may have throughout today's session. Okay, so the content of today's session, we're going to run through. So we're going to start with handing over to Duncan in a moment, who's going to run us through the year-end overview. He'll then be passing back to myself, who'll be taking you through installing your update. It's then back to Duncan for finishing your 2022 payroll before coming back to myself. I don't know if you're seeing a pattern emerging here. Who'll be taking you through setting up the 2023 payroll. And finally, back to Duncan, who will be taking us through what's new in the new tax year and a few different program changes. So with that being said, it is now time for me to hand over to Duncan, who's going to take us through that year-end overview. So over to you, Duncan.
Thank you so much, Calvin, and welcome to the webinar, everyone. So first thing we're going to go through is an overview of the year-end process, which is much simplified thanks to the introduction of PAYE modernisation back in 2019. So in order to put this all into context, the year-end process no longer involves doing a return of payroll information to revenue, as that will all be submitted as and when the payroll is processed. And I'm going to take you through 3 stages of the payroll year, just to explain how everything fits together and what tasks will remain for you when it actually comes to the end of the tax year. So starting with each and every pay date, a couple of tasks you'll be completing, communicating with revenue via their ROS service, is to retrieve the latest RPNs for your employees. That ensures that they are on the latest tax credits and cutoffs that apply to their circumstances at the time. You would then go ahead and enter their payments into your payroll software, produce the pay slip to give to the employee, and you will be submitting that payroll information directly back to revenue via ROS at the end of each pay date. So rather than waiting until the end of the tax year, you will be submitting the information in real time, so real-time reporting, and that happens each and every pay date. Now, in the past, the year-end process used to deal with a lot of reconciliation, but that is also now a task that could be completed throughout the tax year. So when it gets to the end of each month, revenue will generate a statement of account based on all of the submissions that you've sent in the previous month. And that becomes available to you via the ROS portal from the 5th day of the following month. Now, we would recommend that you run the equivalent report in payroll at the end of each month in order to compare with the revenue statement of account, just so that you can be sure that everything recorded in your payroll software matches up with what's been submitted to revenue. We're going to show you how you can retrieve that statement in payroll and how to do a bit of that reconciliation later in the webinar. Also, based on your submissions, revenue do make available the pay and tax details to your employees. So they can sign in to My Account via the revenue website, and they'll actually be able to see the pay and tax details you submitted, and they might choose to compare that with the pay slips that you've given them. Again, making sure that everything matches. So that happens month by month, and when we get to the end of the year, which is in 31 days' time, there really isn't much else you'll need to do. So you will have finished all of your pay dates for 2022, and the responsibility now lies with revenue to provide all the official documentation. So you no longer need to give out P60s, as you will have done in years gone by. Instead, revenue make available an end-of-year statement and employment details summaries, and your employees would need to access these documents via My Account on the revenue website, and they'll become available to them shortly after the start of the new year. Now, in terms of your duties in payroll, as long as you've finished all of your payroll for 2022, there's nothing that you have to do at the end of the year. But what you can do, and this is recommended, is you can print the employment details summary report as part of your tax year-end reports. That can be given to your employee for reference. You can keep a copy for your own records, and that then can be sort of compared with the official employment details summary that they would then get from My Account. So it is a much simplified process, but the aim of the webinar today is to make sure that everything you've done in 22 has been correct and that you get off to a smooth start in 2023. And one of your first tasks, which Calvin will be taking you through, is to install your payroll year-end update. So I'm going to hand back to you, Calvin, to take us through that.
Thank you so much, Duncan. So yes, let's have a look at installing your update. Now, some of you may have already installed the update, but the release is available now. It is currently optional, so it's to be installed whenever you can, but we do highly recommend you get it installed as soon as possible, and it will be going mandatory at some point in December. I don't have an exact date for you just yet, but just be aware that will be happening at some point. So what we're going to do is run through a few top tips for that installation and show you the process and what you need to do in that regard as well. So firstly, as I mentioned, the update is available now. Now, if you haven't already received the prompt and installed the update, next time you close the program down or enter the program, you may well see that pop up on the right. If you're yet to receive that pop-up, you can go to the help option at the very top of your program, select check for updates, and that should then bring through the same pop-up that you see. Alternatively, there is a third option if you don't get that pop-up through neither way. You can click that link on the handout at the bottom of this section, and you'll be able to download the program manually. Now, it's a single install, so don't worry about having to run it more than once, but we'll get into that in a moment. But if you do need to download it manually, you can do via that link available there. So when you download the update and then run the install, you'll be presented with this window as part of the process. Now, we've highlighted this window because there are a couple of options to select, and they are various depending on your current setup. So your typical installation, or the most common one, is a this computer installation. Now, what that means is it's usually when a single person runs the payroll and both the data and the program is all installed on a single PC. What that means is when you run this computer, it will update both the program and the data all in one go, and you're then ready to go and you're up to date. However, there is the client server option. This is the only time you'll need to run an installation twice, potentially, but you will be running the server install first. And what that will do, it will update the data, and then anyone who has an installation connected to that data will then need to run the client install. Now, what I've done is we have a slide here to kind of illustrate that point a bit. So this is for your server client situation. So you can see from the diagram, you have a server, which is where all the data is held. That's usually in a central location. So when you run that server install, that will update the data held on that server. Everybody who is connected to it, so has an installation of the program that is all connected to that same set of data, will then need to run the client install. The good news is, if you run the server install and then forget to do the client one, the next time that you open the program, you will be prompted with a message to say that the data is more up to date, and then it will prompt you to run the install. So you'll get a quick reminder, and that's why we advise to do the server install first. Now, if you did it the other way around, this is when you start to get into a few error messages. But that's the server client installation. And as I mentioned, that's the only time you'll need to run the install twice, which is when you run the install for server, then run it again for client, and it's just updating both the program and your data. Now, once you finish the install, you will have two versions being installed at once. So it's classed as a double installer, but you only need to run it once. What this does is it updates your 2022 version to 25.3. Then it will also install version 26, which is your 2023 program. And then you'll see on your desktop, you will have two icons, 2022 and 2023. You'll also be able to see the version number at the top of the screen on your program. So you'll see the Sage Payroll 2022 version 25.3. And then, of course, you will see 2023 version 26. That's the install, and that's the install journey. A quick top tip from myself is make sure you have full administration rights when you're running installs, and that goes generally across the board. It just means that everything can be installed nice and easy without the fear of any potential issues throughout the journey. So what it's time to do now, you've installed your program, or your update, to finish your 2022 payroll, which Duncan's now going to take us through. So it's back to you, Duncan.
Thank you, Calvin. So that was your first step of the year-end process, and we know that some of you have installed the update already. So the next thing you'll need to do is to finish your 2022 payroll. So what does that involve? It's exactly what you might be thinking. It's completing all pay dates within the 2022 tax year. So if you pay monthly, your last pay date of the tax year will be your month 12 date, your December pay date. If you pay weekly, fortnightly, or 4-weekly, you're looking for that last pay date that falls in 2022. Now, specifically for the weekly based pay frequencies, there are some other things to consider around this time of the year. And the first one I want to mention is holiday periods. So as Christmas falls towards the end of December, if you didn't already know that, there's a good chance that yourself or your employees may be on holiday at the point they are due to be paid. Now, there's two ways that you might handle this. You might be running the payroll a bit early, getting everything prepared and actually paying your employee on their usual pay dates. Or you might be looking to pay your employees in advance. So if they are paid weekly, you might be looking to give them more than 1 week's wages at the same time on the earlier pay date. So let's just look at those two options in a little bit more detail. So option one would be to simply process each of the separate periods separately, producing a set of reports and pay slips for each pay date. And even if you're not going to be here on those pay dates, you can often schedule bank payments to be made on those usual pay dates, or perhaps a previous banking day if it happens to fall on one of the bank holidays. So if you're going for option one, you would run your payroll as usual, making sure you retrieve the RPNs, submit the payroll submission at the end of the process. And if you were paying your staff a little bit early, as I say, make sure they are given the full amount that they are due for all of those pay dates. Now, option two is to use a holiday period. Now, the advantage of this is that you can produce one set of pay slips and reports which covers multiple weeks, and you'd be able to make a single bank payment or generate a single bank payment file for the total amount that is owed. So when you process a holiday period, it uses the allowances for the extra weeks that you're paying. And if you've set up your payments so that they automatically advance holiday, it will kind of double up on the relevant payments to cover those advanced periods. But a quick note about holiday periods: they must not be used if any of the pay dates is an extra pay period, which I'm going to explain next, or if any of the holiday pay dates are in 2023. So those pay dates will need to be processed separately, so you would be best going with option one. So a reminder on how to set a holiday period: there's two ways you could do it. If the holiday period applies to everyone in your payroll, at the point you set the period, you can increase the number of insurance weeks to represent the total number of weeks the payment will cover. So on the screenshot there, we're processing period 51 for a weekly payroll, but we also want to cover week 52's wages. So you could set insurance weeks to 2 when you set the period, and that will apply a holiday period across the board. Or if it's only individual employees that you're paying in advance, you can enter the number of holiday periods in the time and pay screen. So same example on the right, we're processing week 51, and then in the time and pay screen, if we have an additional holiday period for week 52, you could type the number 1 in the holiday periods box. Now, I have linked to our help centre with a bit of further information on that if you are considering processing a holiday period. But remember, you've always got the option, even if you're paying your staff early, to process the period separately and simply pay them the total amount a little bit early. Now, you've seen I mentioned extra pay periods as one of the scenarios where you wouldn't use a holiday period. So let's just explain in a bit more detail what an extra pay period is. Now, first of all, it would only ever affect you if you run a weekly, fortnightly, or 4-weekly payroll. So if you're paying monthly, bi-monthly, or quarterly, there wouldn't be an extra month in the year. But the reason why there is sometimes an extra pay period is that the number of days in a year doesn't divide into an exact number of weeks. So 365 days in 2022 divided by 7 is actually 52 weeks and 1 day. And depending on what day of the week your pay date lands on, there is a scenario where you would have an extra pay date or an extra pay period at the end of the year. Now this year in 2022, the pay date is Saturday. So if you first paid your employees on Saturday the 1st of January 2022, it means that the last payment of 2022 would be a 53rd payment, hence the term week 53, and you would have an extra pay period if your regular pay date falls on Saturday, the 31st of December. If it doesn't, you don't have an extra pay period. And it's really important not to try and create one to cover that single day, because you would just stick to your usual payroll calendar and your next pay date would be week 1 in the new tax year. Now, if you're still not sure, there's a really simple way to check if you have an extra pay period, which I'm going to show you now. So I'm just going to bring the slides down, and I'm currently in my 2022 payroll. And there's a payroll calendar that you can refer to. You'll be setting this up actually at the start of 2023. But if you go to your company/payroll option and then come down to calendar, you can actually confirm what your last pay date of the year is by scrolling to the bottom of the list. And in my example, my last pay date is period 52. It's my 30th of December pay date because I pay my staff on a Friday. And that means that I do not have an extra pay period. There's no 53 in that list. So I don't have an extra pay period this year. My next pay date following the 30th of December will be in January, and that's part of my 2023 payroll. Now, if you do happen to have that extra pay period, nothing you need to do any differently in payroll. You would just process it as normal, and payroll will apply the week 1 basis to tax and USC calculations in line with revenue guidance. So that's holiday periods and extra pay periods. Let's have a look at what happens once you have completed that last pay run of the year. So there is a little bit of housekeeping that we would recommend. So at the start of the webinar, we talked about a month-end process of reconciling reports, and it's great if you've been doing that throughout the tax year. It's certainly what we would recommend. But what you might want to do at the end of the tax year is just to have that final check over each month's payroll, just to make sure that what revenue you have on their records according to your submissions does actually match up with what is held within your payroll. So that monthly revenue statement of account can be retrieved directly in the payroll software, which I'll show you in the demo. And you can compare that with the employer monthly liability report, which can be ran for multiple payrolls if you submit multiple payrolls under the same ROS cert. And that's a way of reconciling the information in your program. So let's take a look at how you would run those two reports. So I've actually completed all my pay runs for the year. I'm at end of period for period 52. So let's start with the the monthly liability report, the employer monthly liability report, which you would find from your main reports menu. You would go to the company tab, and it's this one just here. I'm going to select employer monthly liability, and I'm going to run that to preview. Now, if under your employer reg number you do have more than one payroll, maybe you have a weekly and a monthly, you would tick to include both of them, as you'll be submitting both of those payrolls under the same ROS cert. And if I click on to continue, you've got the option of showing subtotals and breakdowns if you want to see them. But I'm just going to look at the standard report, which will come up on screen as a preview. And as you can see there, for each month of the year, it's given me the total income tax, PRSI, USC, and LPT where applicable. And then you've got the total liability for the month here on the right-hand side. So you want to be comparing this with the revenue statement of account. And I will go through some of the common reasons why these figures might not match up in just a few moments' time. So that's employer monthly liability. run that at any time. Make sure you've completed all your payrolls for the year if you're doing it at the end of year. But to retrieve the statement of account, you could just log on to the ROS portal from your browser. But to save you a bit of time, you can retrieve it directly in your payroll software by going to Direct Payroll Reporting and then just clicking down here on Revenue Statement of Account. So that will then confirm your certificate and password, should already be stored in your program, and it will go away and retrieve the totals that are available. And remember, this information doesn't become available until the 5th day of the next month. So in my demo, it's bringing up to November. So I could start reconciling the first 11 months. Ignore the numbers that you're seeing here. This is just a test system, so it just brings through dummy information. But you can export that as a report, and then the idea would be you work through month by month, checking that the totals, the liability figures are all matching up. So what if they don't? Well, there are some reasons why differences may occur. So the first reason is involving corrections. If you've made a correction in your payroll, but you haven't submitted that correction to ROS, the figures on your revenue statement account wouldn't match up with the figures in your payroll. So you'll need to do a correction submission. Or if you did a manual correction directly on ROS, but you didn't make that correction in your payroll for the same reason, you'll get a discrepancy with your figures there. If you're noticing that all of the months are different, it could be that you're not running the report like for like. So do make sure you've included all of the payrolls that are submitted under that same ROS cert, just to be sure that you are comparing the same information. So that's the two reports in the program. If you want to read more about what's contained on each report and how to run it, just follow the links on your handout on this screen. So you can click on these links up here, and there's an illustration of what you might do going through month by month, checking that the liability figures are correct. And then if you do need to investigate further, you might look at some of your original reports from that period, control summaries, gross to net reports, etc. So assuming all of that is okay, and I would expect it will be in most cases, one other task that we recommend is to validate your payroll data. Now, due to a product improvement that we put in last year, this is a process that often runs at the start of each period, if you set it up to do that, and it will detect if there's any anomalies in your data that you might need to address. It can be run manually at any time from the reports menu in your program, and we recommend that you do this at the end of the year and when you start off a new year, just to make sure that everything is okay with your payroll data. So let's just do a quick check on mine. I'm going to go to the reports menu, validate payroll data, and then click validate payroll data. It'll then run through that check, and lucky for me, there are no issues found. So no action that I need to take, but if any issues are identified, you'll be able to see the full detail of what the problem is. You'll be able to export that as a PDF, and you'll also be able to access our article, which explains what the steps will be to resolve those issues. Now, as I say, this does run automatically in your validate payroll data settings. You can set it to automatically run at start of period, and I've set it to only show results if issues are found, and I'd certainly recommend that you switch that on if you haven't already done so. So quick bit of housekeeping complete. Now on to the year-end process, and this is where there's not really much involved from your end. If we just remind you of how it works on this diagram, revenue are responsible for issuing all official documentation. That tends to happen at the start of the new year. So employees can sign into My Account on the revenue website, check their end of year statement and employment details summary. But you as an employer can provide a report for reference of the employment details summary for your employment, and your employees then got that copy of what was in your payroll records. So really simple to run. I'll give you another demo. So I'm at end of period for week 52. I've completed all my pay runs. So I can now go to the year end menu options, go to tax here at the top. I would access tax year end reports. And then we have here employment detail summary. And this is actually where the P60 used to live. Now, if you're running this report for your own reference, you might want to include levers. So we've added a checkbox so you can include them on the report. And then you've got the output options to either print or preview or export as a PDF. But I will bring up the preview just so you can see it on screen. And then there's a page for each employee confirming their details, and then the year-to-date totals for pay, tax, USC, LPT, and PRSI. So it is just for reference purposes. In theory, it will match up with the employment details summary at revenue's end. You can print this out if you want to give it to your employees, or you could export from the preview and save a PDF for your own record. But keep in mind, this report, if you export it or if you email it, is the full report for everyone. So don't think that the email option will send it to your employees. It won't. It'll just attach this full report. So you need to print it if it's going to your employees, or as I say, export it if you're keeping it for your own records. Now, you don't even have to run this. It's not a requirement, a legal requirement, it's a recommendation. So once you've got that report, maybe saved a copy for your own records, you can then cancel out of the year-end reports, and that is the year-end process pretty much complete. So I have put a bit of further detail in the handout for you if you want to read more about that report. And a reminder there that the official documents will be available in the new year from my account. So that's it for 2022. We are done. And I am now going to hand back to Calvin, who's going to talk you through setting up your 2023 payroll.
Thank you so much, Duncan. So yes, let's have a look into the future now, and we'll start getting set up for 2023. So the first thing to ensure is you've completed the steps that Duncan has showed you earlier, and you finished processing your 2022 payroll, and you're currently at end of period. Now, a quick note. It is possible to do this process prior to completing your 2022 payroll. However, it's not something we recommend, as it can cause issues later down the line. So we always recommend making sure you do this once you've finished your 2022 payroll. So if you're monthly, make sure you finished doing December's. So that might not be until a couple of weeks' time, because we have just hit December now. And of course, if you're weekly, make sure you finished your week 52 or week 53. Once you've done that, you can then go ahead and set up your 2023 tax year, which I will show you in a demo in a moment. But what this does is it basically, any cumulative, it's always a hard word for me, cumulative figures for the tax year are cleared. Your levers are removed, and your RPN numbers, RPN logs, and payroll submission logs are also cleared. Now that is just cleared for the future, so that is in your 2023 payroll, but if you ever need to revisit any of that information, you can just log into your 2022 payroll and the information will still be there. So it's clearing it down for your 2023 payroll. So just make sure you're aware of that, because if you go looking for it in 2023, it'll not be there, but you can just log in to 2022 to check it out. Now, what I am going to do as well is just show you, before we set up the 2023 tax year, what happens if you try to log into 2023 before you run this process. It's a very quick process, but I'll just show you what happens if you do it, try to log in prior to that. So you may have forgot, it can happen, but you'll see in a moment. So we have our 2022 payroll open here, but if I just minimize that and I try to log in to 2023 just to bring in the login screen, you would have 2022 closed when you were logging in normally. Now you'll see here, we've got our payroll. If I click the drop down, there's nothing there. So there is no company, there's no payroll to log into whatsoever. The reason for that is the information has not been transferred over yet, because we've not set up the new tax year. So you can still put your login, your username and your password in, but there is no payroll to log into. So if you ever encounter that, then it is just a case that you have yet to create the new tax year. If you have multiple payrolls, you may have done it for one or two. Now they will appear, but the one that you want to go into might not appear. That is the reason why. So we'll cancel out of that. we shall pop back to our 2022 payroll because we're now going to go ahead and set up the new tax year. As I mentioned, it's a very quick process. We're just going to go to year end, into tax, and then set up 2023 tax year. Now you'll notice at the bottom we are at end of period. So if I click on that, we get a little window. Then all we have to do is click continue. The green bar will scroll across and we're done. So that is it. So that is the tax year now created. So we will be able to log in to 2023, which I will show you now. So if I close that down, we'll close 2022 now, reopen 2023. You'll see now if I drop down, the company and the payroll is available. So we'll click on that and we shall log in as normal. There we are in. So that is it when it comes to setting up the tax year. So we'll come back to the slides. So nice and easy, nice quick process. That quick, it can sometimes easily be forgotten about, which is why I wanted to show you what happens when you try to log in prior to doing this. The next steps are going to be to clear your financial balances, if applicable. Now we are going to demo this, but we're going to demo the next few slides all in one go because it's all part of the same process, which you'll see. Now, the financial year details are completely up to you if you want to clear those down. Again, it's recommended that you do because it can cause complications later down the line and require a bit of manual work, which is never good. This is, of course, if your financial year is the same as the tax year. Now, last year, you'll have seen when setting up your calendar, and we went through this in last year's webinar, you are prompted to select your financial year details. And you'll see there's a tick box if it's the same as a tax year to make it nice and easy, or you're selecting the period at which your financial year will end after. So again, it's up to you and your business needs on what you select for that. If, of course, your financial year is different to the tax year, then you won't receive this prompt and you'll not need to worry about this step at all. This is only if it's the same as the tax year. And you'll see here some examples of where financial balances are not cleared in comparison to the tax balances, which we cleared down when we set up our new tax year. So you've got the employer's PRSI, so you'll see there on the left-hand side in the black box, as well as the tax deductions. So we have tax year and financial year. You'll see there that the tax year is blank or 0, but the financial year still remains. Now you'll be clearing those down, otherwise you will just be adding it to it as you work through the new financial year, which means any information is not going to be accurate and is going to be just cumulative from the last time you cleared it down. It's just going to continuously add up until you decide to clear them down. Once you've done that, it's time to set up a new payroll calendar. Now, at this stage, because it's a new tax year and it's your very first one, if you need to change pay frequency, this is the easiest and most recommended and the best time to do it. So if you are a monthly payroll, but you need to change to weekly for whatever reason, then this is the best time to do it. And it is very, very straightforward to do it at this point as well, which is why it's highly recommended to do it now. You'll then be selecting your first pay date of the year. Now, some of you eagle-eyed viewers may notice a slight difference on the screenshot here, and we're going to skip ahead a little bit and just run through one new feature. So I'm taking a little bit away from Duncan's section later on, but the period date and pay date are now one. So period date has been removed from this. You simply just have a pay date. This is due to the fact that pay dates and period dates should always have been the same to avoid any issues around this time of year. So we have simply removed it and made them all as one. So you only now need to worry about putting in your pay date, and everything else will be sorted in the background for you. If you're paid monthly or bi-monthly or quarterly, you'll need to choose your valid pay days when setting up your calendar. Now, if your non-banking days are Saturday and Sunday, for example, you'll only be choosing Monday, Tuesday, Wednesday, Thursday, and Friday. That just means the program knows that it will calculate your pay dates for each period based on those particular days. And finally, once you've done that, click update and your calendar has been created just like this. So as if by magic, we have now created a calendar. Now this is a weekly one, continuing with the theme of every Friday. So the first Friday is the 6th. Again, we will be showcasing that in a minute, but that is your calendar now created. So when I said showcasing in a minute, what I really meant was, let's jump in and do it now. So here we are back in our payroll. So the first thing I'm going to do is I'm going to change pay frequency because I'm going to set up a monthly calendar just to show you before we go ahead and finalize with a weekly one. And we'll show you how to change that pay frequency as well. So we're going to go into company and payroll, company details, and then we have payroll frequency right here. So I'm going to select the drop down. We're going to pick monthly for this one. Now, all the options are available there, and the processes are very similar to each and every one of them. The only difference being those valid pay dates, which I'll explain in a minute. So we're going to click OK. We're now a monthly payroll, so it's now time to set up our calendar. So again, company payroll at the top, down to calendar. There is our prompt because our financial year is in fact the same as the tax year. So it's asking us if we wish to clear down financial balances, or if we don't want to, we can select that option as well. So it is a choice, it's up to you. Again, it is recommended to do so, but you may have certain circumstances which determine that you can't just yet. So you do have the choice. We're not going to, because we're going to be doing that when we finalize the weekly calendar. So I'm going to click do not, continue. We're just going to OK to that message, just explaining the cumulative thing. And now it's time to set up our calendar. So you have a couple of options here. If you have a regular pay date, so for example, you may pay the 25th of every month, you would enter that in pay date. If you just pay the last day of every month, you can, of course, just tick this box here, grays out the date, so you don't need to worry about popping in a date because it is automatically going to select the last day of the month. And that's what we're going to do for this one. But as I mentioned, we also need to select our valid pay days. Now I'm going to go with that example I gave earlier where we don't do banking days on Saturday or Sunday. Therefore, our valid pay days are Monday through to Friday. So we selected each one. And that's all we need to do. So what we need to do now is click update. And there it takes you over to the tab on the left, which is your calendar details tab. And you can see it's automatically filled in all of the dates for the final day of the month. Now, because of those valid pay days, you may notice that April and September is not the actual last day of the month because those will fall on a weekend. So looking at April, the last day of the month is going to be on a Sunday. Therefore, it's picked the Friday prior, which is the 28th. So it automatically does it for you, works out what days are what, and if it lands on a day that you have not selected, it will give you the earliest day prior. So I think in the last day of the month for the new tax year, we have 3 instances. So we have April, we have September and December. So you'll notice that those dates are not the last day of the month. That is due to those valid pay dates. And underneath that, you'll see your financial year details. So again, just a reminder, if you need to, you can select your financial year here. We do have the tick box for if it's the same as the tax year, which makes it nice and easy. It just recognizes that come year end, you're also at your financial year end. Or alternatively, if you have a different financial year to the tax year, simply select the period that your financial year will end after. So if it begins in, say, period 7, so July, that means your financial year ends after June. So it ends after period 6. So that's what you would do in that scenario. So we'll go back to ticking that box because we're going to keep our financial year the same as the tax year. I'm going to go ahead and cancel out of that now because what we're going to do is go back to changing it to weekly, and we'll set up a weekly calendar now. So back to weekly there. If you need to clear your financial balances manually, because you again mentioned that you had some circumstances where you need to keep them for whatever reason, you can, of course, then go back and clear them manually by selecting year end, financial, and then you've got your 3 different areas to clear here. So just go through and clear out what you need to do. The easiest way, of course, is just letting the prompt do, which is what we're going to demonstrate today. We're going to go back to our calendar. So again, company/payroll at the top, all the way down to calendar. This time we're going to clear down our financial year balances. I'm going to click continue, just mentioning that it is now complete. And there you go. We have our calendar ready to set up. So this time you'll notice that the valid pay days are grayed out because we are now a weekly payroll. Now the reason for this is you tend to pay the same day every week. So using our example, we pay every Friday. All I need to do is select the first Friday of the tax year, which happens to be the 6th of January. And then it will automatically add on a week and go from there. So it's going to be every single Friday from there. So it's always going to be that week in advance. So you don't need to worry about a valid payday when it's weekly. Just make sure you've got your pay date in there. I'm going to hit the update button again. And as it did before, you will now see that we have our weekly calendar selected. And as Duncan showed earlier, you can scroll all the way for the full tax year. So if you do pay a Friday and you are weekly, then you don't have to worry about week 53 at all, not just this year, but also next year as well. And you'll see that it's not appearing on that calendar. So you can look into the future a bit and check all your pay dates for the tax year coming. Same for the monthly. You can, of course, select your financial year as the same as the tax year. So we're going to go ahead and hit save. And that's our calendar now set up. So we are now good to go, which brings me on to the next slide, which is processing period 1. Now, the good news here is there isn't very much different that you need to do. There is quite literally nothing different that you need to do, as you see the steps there. You simply set your period as you would normally, validate your payroll data, as Duncan showed you earlier, see if there's any errors or anything, retrieve your RPNs. Now, the only difference here is, unfortunately, obviously, we do not have a live feed to Roz for this, but when you retrieve your RPNs for your first period, you will get all the new RPN numbers, etc. So you'll have a lot more information coming through to import when you retrieve your RPNs for the very first time. So don't worry if you see a load of changes. But again, the process is no different to what you would do in a normal pay run, because after you've retrieved your RPNs, it's into enter time and pay and to process as normal. So quick recap for that. So we'll run through what we've just done to set up your 2023 payroll. So firstly, we set up the new tax year. That transferred the payroll over to your 2023, removing any levers, clearing down any tax year balances, as well as your RPN and submission logs. Reminder on that one as well, if you do need to access any of those, you can by jumping into your 2022 program. We cleared our financial balances because our tax year our financial year was the same as the tax year. Again, this is only if that is the case. If not, you'll be doing that when your financial year comes to an end. We then set up a new payroll calendar. So we had a look at both monthly and weekly, and we set period 1 and retrieved our RPNs, which is the same process as you would throughout any period. So there's no difference to what you're normally used to in that sense. So unfortunately this year it does not rhyme like it did last year, but we're going to have a look at what's new in 2023 this time, and I'm going to hand back over to Duncan to take us through that.
Thank you so much, Calvin. So this is the final part of the webinar, What's New in 2023? We're going to start with a very quick look at some of the key budget changes, which take effect on the 1st of January, and then we're going to go into statutory sick pay, and we've got a little section on gender pay gap reporting. So starting with those budget highlights, this budget was announced a few months ago now, I think back in September of this year. And I've just pulled out some of the figures, the key figures for these changes. So in terms of PAYE income tax, the standard rate cutoff point relating to a single person has been increased to €40,000 per year. So that's the same sort of basis that emergency tax would be calculated on if you do have anyone on emergency tax. Tax credits have also increased, so single person and employee tax credits combined is 3,550. For USC, the upper threshold for standard rates has increased to 22,920, and all of those changes will be applied to the relevant employees based on their circumstances. So it won't necessarily be these figures, but they'll be applied when you retrieve that first RPN of 2023. Now, other notable changes is that the minimum wage increases to $11.30 from the 1st of January 2023, and that is for hourly paid employees 20 years and above. And look out for any warnings on your timesheets when you move into the new year. If you're paying anyone below the minimum wage hourly rate, you will see a flag. So that should hopefully prompt you to increase those rates. And related to that, the weekly income threshold for higher rate of employer PRSI has gone up in line with that minimum wage. So that's now €441 per week. But rest assured, all of these changes will be implemented for you, either by retrieving RPNs for the most part or built in to the 2023 software. So you'll see in 2023, it says budget 2023 compliant, and that will be the software that you're using in the new year. So next up, I'm going to move on to statutory sick pay, the long-awaited statutory sick pay, as it was due to come into force back in 2022, but it did get delayed. It has now been signed into law. So statutory sick pay legislation takes effect from the 1st of January. So I will show you how to process this in your program, but let's have a look at some of the key points of the legislation. So this legislation allows for paid sick leave for up to 3 sick days in 2023. This will increase to 5 days next year, 7 days in 2025, and 10 days in 2026. The rate of statutory sick pay is 70% of normal wages, and it will be paid by employers, but capped at a maximum of €110 per day. To qualify, employees must be working for an employer for at least 13 weeks, and they need to be certified by a GP as unfit to work. And we've linked to more information on the statutory sick pay scheme on the handout there, which you can access if you were to download it. Now, in terms of setting up, just a couple of steps involved. You'll need to create a specific payment for statutory sick pay. You just need to create one of these, and you can use it for anyone that will need a statutory sick pay payment. And you will also need to enter the daily rate that applies to an employee for the SSP calculation. Once you've done that setup, you'll be able to process the payment at the point you run their payroll. But I'm going to give you a demo of that just to bring that to life. A quick note as well, if you have your own company sick pay scheme and it reaches or exceeds the standards of the statutory sick pay scheme, you will not need to process statutory sick pay. You can continue with your company sick pay as long as it is providing at least the level that statutory sick pay would. So I'm actually in my 2023 program now, as you can see at the top here, budget 2023 compliant. First thing I'll do is show you how to create the sick pay payment. So you go to company/payroll, and then you'd go to payments, just here towards the top. You'll need to create a new one, but as I say, you only need to do this once. Give it a name. I'm going to call it SSP, and from the type drop down, from here you would choose statutory sick pay. Now you can see here it will work out 70% of the daily rate that you enter. So it's going to work that out for you, work out the SSP, but you will need to provide the daily rate. And I'm going to show you where in the next step. So that is the payment setup for statutory sick pay. I can then just close out of this payment screen. And then if I then have someone that's gone off sick and needs to receive SSP, I will need to access their record. So I'm going to edit the employees. I'm just going to use employee 1 in this example. And I'll go on to the absence tab. This keeps track of the entitlement and any days taken. So it's a good place to check if they've received it in this tax year, but you need to provide the daily rate. So this employee earns €100 a day. So that's what I'm going to put in as the daily rate. If I then click on to save, I'll show you how the SSP is then calculated. So let's say the employee has been off sick in the first week of January, which is unfortunate. We'll set the period, retrieve our RPNs in the usual way. I would then go into enter time and pay, and I'll just do this in a sequential way. So this is employee 1. You can see the SSP payment is there on the timesheet, but actually to calculate the payment, you'll need to go on to holidays/absence, and you would need to record the days taken in this period. So daily rate has come through from what we entered earlier. Let's say they're getting 1 day of SSP, so it's worked out 70% of that amount, always cap it at that €110 per day. I can then jump back to the data entry tab, and you can see that the amount of SSP has been populated for me. Obviously, I would want to adjust my salary in this instance because they've been off sick for a day, so I'm going to reduce their salary to 4 days pay, and in total they're going to get this €470, which includes that first day of SSP. So that's how it is processed. We'll just recap that again on the slides. So that was the setup. As you saw, creating the payment and entering the daily rate, and processing involves recording the absence and then checking the SSP amount. And I've included some useful links in your handout as well, so you can access our knowledge base article on this, and also all of the details of the legislation is available in that second link. And finally from me, another bit of legislation that took effect in 2022 actually is the gender pay gap reporting. But with the latest update to Sage Payroll, we now have a new file export, which will help those of you that are required to publish your gender pay gap reports, gather the information that you might need. This will only apply to employers who have 250 or more employees on the relevant snapshot date. So you will choose a snapshot date in June 2022, and then you have 6 months from that date to publish your gender pay gap statistics on your public-facing website, and there is plenty of guidance on how you would do that, basically reporting on differences between averages for males and females. And I will leave you to read the information on the supported links. But what I want to show you in this brief demo is where to access the gender pay gap file export, which is available in the latest version of Payroll. Now for this one, I'm going to go back to 2022 because I'm reporting on the period up to my snapshot date, which was June 2022. Obviously it does span tax years, so this report runs across multiple tax years. You'll find it in the other reports section. So I'll just go into other reports right now. And from the payroll tab, you'll see there's a gender pay gap button. So you'll need to work through a wizard. First of all, confirming your snapshot date. So to give me the maximum time, I've set my snapshot date to the end of June. So the information will be generated based on this date range. You choose the elements of pay that's applicable to your payroll, so whether you pay ordinary pay, bonuses, or benefits in kind. And then for each of those categories, you need to choose what payments you want to include in the file export. So for ordinary pay, for example, I would include basic and overtime, holiday payments and salary, but you would exclude information such as mileage payments, reimbursement of expenses. So I haven't ticked that one. You've then got any payments that you need to report on for the category bonus and benefits in kind likewise. So you can then complete the wizard, which will then save some CSV files within your reports folder, and you can change the location of where you want this file to be output. And if I click on to create, you can see it's created my reports. And there's a handy link to open that location where you'll find, in this case, there'll be 3 files that have been exported. So a quick look at one of the files. Here's one I prepared earlier. So it gathers the information it can find from your payroll. So we have a column for gender. You've got the different payment types you included in the report. You've got the total pay, and where available, it will give you an indication of the hours that were worked in this period, or contracted hours, if you have that information stored anywhere in your program. Employment type does come from the employee records. So if you do have full-time, part-time, etc., if you filled that in, that would appear on the output as well. And then it's down to you to follow the sort of gov.ie guidance on creating the report that you're then going to publish on your website. So I just wanted to show you that new file export, which is included in the program. But in terms of further information on how you work it all out, again, I've got some useful links. So you've got the Sage knowledge base on what you can do in Sage Payroll, and then all of the guidance at gov.ie on reporting on the gender pay gap. So 250 plus employees as of June. It is planned to come in for smaller employers in the future. And that is about it for the presentation. I'm now going to hand back to Calvin, who's going to run you through some further support, and we're going to stick around and continue answering questions in the chat. So back over to you, Calvin.
Thank you so much, Duncan. So yes, let me get my screen back on and we'll run through all the available support that you have to you for this end of year. Almost forgot that it was payroll year end for a minute there. So first and foremost, we have our amazing help center. Now in our help center, we actually do in fact have a payroll year-end hub, which I will be showing you in shortly, alongside our wonderful digital assistant, Peg, who can take you through the journey step by step, including that install journey as well. So I'll show you that. But also what you can find in our help center is you can search the knowledge base, so various different guides that you can find for various different problems, for example. And this is a top tip from me. If you do get an error message, note down exactly what the error message says and type that in the search bar, and that will help narrow down your search to any guides or articles that are relevant to that particular error message. So this is just a bit of top tip from me to help with that. We also have various different support guides as well, so things like correcting mistakes, processing your payroll, all your available online submissions. We also have webinars and videos available. So any future payroll year-end webinars that we have will be found here. So we do have quite a few of these. So if you want to come and join us again, feel free to do so. We have them running throughout December, and we've even got a couple in January if you want to pop back, as well as the get in touch options. So we do know that with some circumstances, you do need to speak to us for whatever reason. And the options are available here as well to get in touch via either our web chat or phoning us. But hopefully you don't need to go that far, because all the information can of course be found here. Now I did promise to show you the year-end hub as well as our wonderful digital assistant Peg, so I'm going to do that right now and show you it, because it is also very useful to know and see this in action to see how useful it is. So here is our payroll year-end hub. You can see we've got access to the webinar if you want to come join again, but we've also got it step-by-step basis. So you have a step one, which is to install the year-end update, where you can download and follow the steps. We also have completing the tax year, getting ready for the new one, as well as processing in the new year, any available legislation, and some common queries at year-end as well. So I've seen a couple of questions that have been quite similar today. Hopefully you got them answered and you will manage to see the answer, but we can see some common queries are available here as well. So go check that out when you're done today. Did mention we have Peg, our wonderful digital assistant, right here. So we can certainly use Peg to go through various different steps. So you can see here we have a lot of subjects Peg will take you through. So if we look at installing the year-end update, we will select that option. And it's asking about preparation steps. Now we're going to go with yes, but if you haven't, just click no, and it will take you to those preparation steps. We're going to click yes. We are logged in and ready to go. So you can see there, Peg is taking us through step by step. So taking through each step to tell you to make note of program directory, data directories, etc. So this is your standard installation stuff. And again, you've got a link to download as well even gives you the link to download it. So I see we've overrun a little bit, so in the instance of time, I'll not go through the full journey, but you get the gist. It's just there for you if you need it at any point at all. So Peg is available 24/7. We also have Sage membership. That's it now. So Sage membership, I was nearly going to call it Sage University, but Sage University is a part of it. Sage membership is free to every Sage customer. And here you have access to 3 different things. You got Sage University, as mentioned, so you can log on there and run any kind of courses that you like, which you can do in your own time at your own pace as well. We have Sage City, which is an online-based forum where you can speak to experts in the same field as yourselves. You can offer your own hints and tips as well if you wish to do so. And we have our Sage Masterclass, which is a series of videos from various experts on specific topics. Season 2 has occurred, and that was all about unlocking productivity. So again, head on over to sage.com/UK/masterclass to have a look at that. So I know we are overrunning a little bit, but we will stick around for a little bit longer just to help out with any remaining questions, and we will try and get them answered as best we can. Apologies to anyone if we don't get round to you, but we will certainly try our best. And I'm going to jump in and help out as much as I can now. So I'm going to go on mute, and I'll be back shortly to say our final goodbyes. Just a quick one. If you are leaving us at this point, you will be directed to a short survey now for Duncan and myself. It means a lot for you to fill that in and let us know how well we did. And if there's any areas of improvements you think, let us know, and we'll certainly try to implement them for future webinars to make sure these are as valuable and as informative as possible for you guys. We can't do that without that valuable feedback. So it does mean a lot to us if you do fill that in. That would be great. So yeah, I'm going to pop on mute now, and I'll be back to say our final goodbyes. Okay, everyone, time has come up. We are unfortunately going to have to close the session now. Again, a big apology to anyone who didn't get that question answered. We did try our best to get through as many as we possibly can. Thank you so much for everyone who has attended today. It's been an absolute pleasure to see so many of you on, hence the reason we didn't get through all the questions, because we were so busy today, which is obviously very pleasing for Duncan and myself. Don't forget about that short feedback survey as well. It does mean a massive amount to us. But again, thanks for everyone who has attended. I hope you're all looking after yourselves out there, staying safe still, of course, as well, and we'll hopefully see you in the next one. Thanks for watching. Bye.